Today we're going to talk about determining trade entries on price targets and stop losses. Okay, so I was trying to get the screen to work right. So for our agenda tonight, we're going to determine the entry. Step 1. Step 2 is going to calculate the price target. We talked about a couple different ways to go about that. And then the third being calculating stop losses. So step 1, what type of trade is it? When we determine the entry, it's essentially two different types of patterns to go off of. The breakout over critical resistance and then dip buying at support levels. When buying stocks on a breakout over critical resistance, your entry should be one increment above the respective level. So, if you as an example, if you want to trade something for $4, buying that stock on a breakout over critical resistance, $4 natural resistance, you would hit buy the actual stock at 401. Inversely, as dip buying stocks is a little bit different. The entry should be on or above the critical support level that you're dip buying off of. So, for example, that $4, again, the example of $4 being a support level. If you want to dip buy the stock, be putting the buy order at $4 or right above $4. Let's say 402. Sometimes those natural support bounces aren't exactly on the increment of $4. It can be 401, 402, up to 405. I would say would be an area you can put your entry on, just right above that level. So it's a little bit opposite from breakouts on or over critical resistance. You have to put that breakout over one increment over. So having the breakouts over resistance and having dip buys, all the patterns that we trade, be it bull flags, descending wedges, it's all based off either dip buying at support levels or breakouts over resistance. So that's why I like to use these two examples. So for one, talking about the technical breakout, the entry should be one increment above the respective level. Here in this chart, we can see that I was buying this over $2 on the technical breakout on that natural level of resistance over $2. It ended up being a parabolic runner on the day. It's a little bit higher risk technical breakouts compared to dip buying. We talked about in that in the webinar earlier on in the last month, talking about dip buying versus technical breakouts and what your risk reward ratio should be. But we know the technical breakouts have a higher risk inherited, but end up being high reward probabilities as well. In technical breakouts, you can use natural or technical resistance levels. This in this example here, we're buying over $2. It's a natural level of resistance, but technical breakouts also apply to critical levels of resistance to maybe 217, 218, just whatever a chart location that you can tell historically what the resistance level is on a specific increment. So the location of this entry was 201, just one tick over the $2 resistance level. You can see natural breakouts. Technical breakouts can be very significant, especially with penny stocks in specific types of seasons where volatility may be slower in other parts and other segments of the market. Penny stocks start running. You can see energy sectors break out to just ridiculous levels. So that is something to watch later in the summer. Closer towards September, volatility starts to isolate a little bit more. Second pattern I'm talking about, buying the dip. The entry should be on or above the chart's critical support level. You can see here in this example, we did bought this at 99.25, right off the natural support level. It ended up being a fake out breakdown and made higher highs. It ended up being a trend reversal for a 5.48% winner. It's got lower risk, but again, lower reward. We talked about this last month, a couple webinars ago. buying the dip, you can use natural again or natural or technical support levels. This here was 99.25 natural level of support. You can see it broke down under that level it did hit. Could have been a critical support level on the historic charts if we look back at it. But I used a natural level of support to dip buy here, and the location of the entry was 99.25 for the trend reversal win. The chart before, you can see there was a more potential there on the technical breakout. It's because with the inherited risk, higher reward type of action, I would normally take profits much quicker on a dip buy. Just as it bounces, it attempts to test critical resistance levels on the way back up. Without a couple factors like volume or first news catalysts, sometimes it can be difficult to break over those resistance levels. So it's easy to just buy the dip, take quick profits on a bounce. This ended up being a trend reversal and breaking through those resistances, making higher lows and actually establishing a trend off of its low of day of 99.25. So it ended up being a good runner. The breakouts offer higher reward ratios but require wider stop loss range. That's the difference between buying the dip and buying technical breakouts. Dip buys offer lower reward ratios but minimizes risk with tighter stop losses. Those dip buys are often off of natural levels of support or critical levels of support. Putting a stop loss tucked right under those support levels minimizes your loss. Anybody have any questions so far? You can throw them in Discord and I can answer them if need be. Also, there's also a chat platform on GoToMeeting. I can also answer here as well. So we talked about when buying stocks on a breakout over critical resistance, your price target should be based on next resistance levels or your personal percentage goals. This is how you kind of determine or calculate your price target. If you're somebody with a dollar amount goal or price, or, a daily dollar amount you want to achieve, let's say $100 a day, $500 a day, whatever it is, or maybe a dollar percentage or a dollar gain per trade. Let's say you want to win at least $50 a trade, or maybe at least $100 a trade, depending on how much capital you're using. Whatever personal goal you have, that's how I would recommend establishing that price target or calculating a price target. That way you can determine whether or not it's worth taking the trade. Is there enough range and volatility to reach a price target in which you would achieve that profit dollar target? Let's say it's $100. So when buying stocks on a breakout over critical resistance, your price target should be based on that next resistance level. That's if you don't have a personal dollar goal. The next resistance level, let's say you're buying over $2, the next critical resistance is 210. Your price target should be 210 or under, right? Because the probability of it breaking over that resistance level, it gets smaller as it approaches that resistance. So taking profit would be the smarter thing to do. Unless you're in half size, sometimes I like to get a little more aggressive with half size positions. But when dip buying stocks, the price target should be based on its next resistance level or, again, a personal percentage risk-reward ratio. Like I usually stick to at least a 2-to-1 risk-reward ratio. And so if I'm risking $100, I want to have a $200 win price target, right? So we talked about the last slide, when dip buying stocks, on the bounce, it starts to approach these critical resistance levels, and in order to establish an uptrend or a trend reversal, it's got to break over these resistance levels. So I recommend setting a price target at that next resistance level if it's within your price target range. Maybe it needs to break over a resistance level, and you can set your price target at the next highest resistance level. This tends to get a bit sticky. Again, I like to stick with risk-reward ratios. A 2-to-1, if I'm comfortable risking 25 cents, is 50 cents achievable if, based on volatility and volume? If yes, then I like to use that 2-to-1 risk reward ratio. So for breakout price targets, we talked about technical breakouts, higher risk, higher reward type setups. For the price targets, I would like to look at least between a 5 and 10% move on the technical breakouts. For dip buys, a little bit lower, 3% to 7%, depending on your individual risk tolerance levels. Your preference ranges will vary, excuse me, based on your individual tolerance and goals. Calculating stop loss is a little bit the same concept. When buying stocks on a breakout over critical resistance, your stop loss should be one increment under next lowest critical support or individual risk tolerance. When dip buying stocks, the stop loss should be just under the entry location. So if you're dip buying a stock, your stop loss should be right under the next support level. So it's just a real tight stop loss. And the technical breakouts, again, because it's a little bit higher risk, your stop loss should be right under its previous support level, just one tick under its previous support level, because you're expecting a bounce off that support level. So if you're buying over $2, 189 would be my stop loss, right? Because the 190 natural support level is there. You're expecting a bounce there off 190 to move up to that $2 level again to retest that breakout level. When dip buying stocks, that support level under the support level you're buying, just that next previous support level, just one tick under it. Again, you're on that dip buying, you're expecting a bounce on that support level right under the support level you bought it at. And you'll notice on the stop loss, breakout stop losses, it's always going to be smaller, right? Because you want a positive or preferable risk reward ratio. So for a breakout, your stop loss wants to be range between 4 and 6%. And the dip buying stop losses, again, lower risk, lower reward type situation, want to range between 2 and 4%. Again, ranges will vary based on individual risk and tolerance. So thank you guys for joining me on this Monday night. If you guys have any questions, please feel free to send it to Discord or here through the chat platform on GoToMeeting. All right, guys. Well, thank you very much for joining me. This is recorded, so we'll get this converted over to MP3 and posted for you. Thank you guys for joining me. You have a good rest of your night.